Welcome back to another episode of Multifamily AP 360. And we will be celebrating 400th episode of AP 360. For this special episode, we have an incredible guest who is mastered the multifamily game, managing 2 billion in assets. So with that, our today's guest is Zach Haptonstall from Rise 48. Welcome back, Jack.
Yeah, thanks so much, Rama. I am honored to be the 400th episode. And I know you and I were just talking off air before. I was like, when was the last time we did this, Rama? And you were telling me I was the 24th episode in 2020, 4.5 years ago. It's crazy how time flies by. So I appreciate you having me back on here, man. Looking forward to it.
Yeah, absolutely. Absolutely. Thank you very much. And a little bit about Jack. Jack is the CEO and co-founder of Rise 48 Equity, Rise 48 Communities, and Rise 48 Construction. Jack's main responsibilities as CEO include overseeing all acquisitions, sourcing capital, and building strategic partnerships. Since 2019, Rise 48 Equity has completed $2 billion plus in total transactions. So last time we had conversation like you are like 5 deals, 48 millions under asset management, and you shared about tenant income and take, and also
Yeah.
like 1031 stuff, and also some personal side books. And share us your journey from 5 deals, now 53 plus deals, right? And 48 millions to 2 billion plus deals.
Yeah, absolutely. Yeah, no, it's funny, Rama. Yeah. So I know you reminded me too that the last time we did that, we had just gotten started. I was about 2 years into it and had my own, personal brand, ZH Multifamily. And so when we started, I had partnered with my business partners, Bikram, who's our CFO, and Robert, who's our chief construction officer. And the three of us, we've done all the deals together since we started, including those first five. But we had our own personal, brands or companies. And so I think it was shortly after we did that podcast in 2020, Rama, we formed Rise 48 Equity to kind of quote unquote get married, in the business sense. And our goal and vision was to have a truly built out large private equity firm. Okay. And so that's what we've been working on, the last 4.5 years since we last did the podcast together. And so, since then, we've started our own property management company. So we're completely vertically integrated. We've started our own construction management company. We've sourced overseas supply chains of materials so that we can control our costs and our materials with everything. And we've purchased, an additional, 48 deals since the last time we were on the show here. And so we've purchased 53 assets, over 10,000 units, over 2 billion of transactions, like you mentioned, Rama. And we now have over 250 full-time W-2 employees. And when we started out in Phoenix, as you know, Rama. We've since then expanded to Dallas, Texas. We opened up an office in Dallas, and then we opened up an office in Charlotte, North Carolina, and have purchased deals there. I know you and I just met up in person at a coffee shop last week in Charlotte. I was in your neck of the woods over there in North Carolina. So yeah, so we're excited to have expanded to new markets, kind of just built out the infrastructure. And I think we're honestly like more excited and hungrier than ever to keep growing and scaling.
Yeah, absolutely. Thank you very much. Thank you for sharing that. So last 4 years, like multifamily market is like significant fluctuations, right? Initially COVID, then high interest rates hiked like within short time, and also
Yeah.
inflation, all this supply chain, all these issues, right? So how do you maintain a growth mindset during this market fluctuation or downturns? How does this mindset influence your investment decisions?
Yeah, it's a great question. It's funny you say that, Rama, because I was talking to Bikram the other day, and Bikram and I were joking. It's like we cannot catch a break since we started, okay? Because when we started the company, we made no money for the first 3 years. Okay, we were just grinding. Any money we made, put it back in the company, and then when we were about to start to hit our momentum, COVID hits, and that like slowed us down for a year because we only bought a couple deals in 2020, and then in 2021 we felt like okay, we got through COVID and we're going to catch our momentum, we start scaling and growing, building infrastructure. Then in 2022, you have these unprecedented interest rate hikes. And so we've spent the last almost 2.5 years now. It's almost been 2.5 years since the Fed started to aggressively hike rates in March of 22. We've been focused on growth, and I'll kind of discuss how we've done that, but also we've had to make sure that we're taking care of those deals that we bought in 2020 and first half of 22 right before rates went up. And so we're proud that we have never done a capital call. We've been able to renovate those units and really execute our business plans to force appreciation increase NOI and fight back against interest rates to kind of weather the storm. And so we feel like we've done a good job, but it's been tough. It's been a grind for everybody in commercial real estate and multifamily the last couple of years with these interest rate fluctuations. But, I think that, when I was getting started in this, Rama, I had no background and no experience. And when you're going to be an entrepreneur and you're just going to start something from scratch, you're going to naturally feel fear and anxiety. And so you get used to being uncomfortable and you start to realize, like, hey, wherever my discomfort or fear is, that's probably what I should be attacking and pushing my comfort zone to grow. And so what we've realized the last 2.5, 3 years, even with the challenges of COVID, interest rates, et cetera, is that those are the times where you can actually take advantage of your competition and you can find good opportunities. And I mean, I remember it was near the end of 2022, all the institutional money was on the sidelines. We had wanted to expand to Dallas, Texas for a little while. And we realized, you know what, now is our window because there's not a lot of competition. We can buy distressed assets at a really low basis. And so we went into attack mode and we're the number one buyer in the country in 2023 in Dallas. And we were getting great deals and all those deals are performing really well. And we've built infrastructure, have almost 3,000 units there now. And so, yeah, I mean, I think that, it's important to keep an open mind for where are the opportunities. And obviously you have to maintain the deals that you purchased prior to that. But, we feel like we've done a good job. We sold the first 11 deals that we bought. Okay. And those were all home runs. And then, we had the deals that we bought in the 12-month window from June of 21 to July of 22, which those were all right before interest rates skyrocketed, right? And so that was challenging. So we had to pause distributions on a lot of those deals. Fortunately, we haven't done any capital calls. A lot of groups have done capital calls now across the country. We adjusted our underwriting in the summer of 22 after the second interest rate hike to adapt to the higher rate environment. And so every deal that we've purchased since September of 22 has been cash flow positive and is distributing to investors every single month since we acquired it. And that's 18 deals. Okay. So, it's a lot of deals, thousands of units that are doing really well. And we've been able, like I said, to renovate those other units and get those deals to cash flow positive, most of them in that summer of 21 to 22, extend loans out and find solutions. And so, it's been a crazy ride. It feels like we've been doing this for like 15, 20 years, but it's been like 6, 7 years. So that's kind of, what the last few years have looked like.
Even our last episode also, there is some common theme around attacking and relentless as high intensity. So again, you mentioned that, right? Build good portfolio around 2 billions. How would you consider you're highly successful? How do you stay hungry and avoid complacency? So what drives you to continue expanding and improving your portfolio?
No, that's a great question, Rama, because I think it is easy to get caught up and believe in your own hype for anybody. You start to, experience success and you feel like, oh, I've done enough. But I'm constantly always trying to like improve my mindset and trying to be very aware of my mindset. Because as a CEO, at the end of the day, I don't want to sound arrogant, but the company will go as I go. Everybody is looking to me, and I'm going to set the goals and the tone for where the direction of the company is. And the last few years, and we do quarterly all staff meetings with the entire company, and we give updates on the market, how things are doing. Then we do like a team event, like a team building event. And I've been telling people for a few years now that our plan at Rise 48 is to be the largest real estate company in the world. Like our goal is to be bigger than Blackstone. Okay. And it could take us decades to get there, but we mean that, it's not just some BS pie in the sky. And so we honestly don't feel satisfied or complacent with what we've achieved because we have so much further to go and our goals, are so much bigger. And we honestly feel like we're competing. I always like to think that I'm competing against myself. I don't like to compare to other people because you can easily get discouraged that other people are bigger than you or they're doing better than you, or that can make you complacent. If you're comparing yourselves to people that have lower expectations and you feel like you're beating them, then you may slow down yourself, right? And so we want to set our own goals and keep striving to achieve those goals. And honestly, we feel like COVID and then the interest rates have only slowed us down from what we could have been, where we could be right now. And so we're just trying to grind through that adversity and keep growing. And so I think it's something that, it comes down to, okay, what are the long-term goals And what are we really trying to achieve here? Like, are we going to buy 5 or 10 deals in a year and then, pat ourselves on the back, or is that the expectation just to stay on schedule? And so that's kind of how we look at it. And so it's exciting because, I feel like, I've had like past sales jobs before I got into this. And when you have a really good month or you get a bonus or you hit a big goal, that's great. And you should enjoy, your success, but you can't dwell on it because then you start to get soft, mentally, emotionally, and you have to keep, pushing towards the next challenge and embracing the new fear and pushing the comfort zone. So, that's what we're always trying to do. And that is where, to me, that's where the joy comes in, right? I think that I've talked to other people that are super successful and they achieve their goals and they stop and they become miserable. I talk to like people who are retired who are miserable because they have no purpose in life. And so, the challenge, it sounds cliche, but the challenge is really, the exciting part because you have to go through the adversity and the fear and the anxiety of trying to overcome what seems impossible. But then you do it and you're like, wow, that was very satisfying, right? And then you want to go, climb for the next rung on the ladder, so to speak. So, I mean, that's kind of how you have to keep your mindset, I think, to keep growing.
Absolutely. So there are a couple of follow-up questions, one on personal side, other one on leadership side. So personal growth also very important, right? So what kind of, actions or how exactly you improve your personal growth side, and also from leadership style also, how your leadership style evolved as your organization has grown, and what key leadership principles have remained constant throughout your journey.
Yeah, great question, Rama. And so, that's something I've really been focused on the last 6 to 12 months is like, okay, we're at like 250, 260 employees, we're at this point. How do we take it to the next level? And how do, not only for me, like, how do I offload a lot of the things I'm doing to focus on my highest and best use or like unique abilities, but how do I then implement that into the different tiers of our leaders at the company, the directors and the manager level staff? And so I'm no expert at it. I think obviously leading by example is really critical because when people see that you do stuff and you practice what you preach, kind of leading from the front, so to speak, that they respect that and they want to work hard because they feel like they're part of a team, something bigger. But at the same time, is that when you're like a CEO or leading a company, you're going to get to a certain point, I've been realizing, where you're going to get bogged down with too much little minutia stuff. So, I used to think, hey, I need to be first one in, last one out of the office. I need to be showing these guys that nobody will outwork me. I would literally stay at the office and look at the window in the parking lot. If there was a car in the parking lot, I would just wait, even if I had nothing to do, so that I wanted every employee to see my car is there last. You're not going to leave before me, right? And then, this year we've been getting busier, growing. I had a baby 3 months ago, and it kind of changed my perspective. And I realized, okay, now as a father, how can I carve more time out? But as a business leader, how can I just be more effective and more efficient? And so I've joined a couple different groups. Like one is called YPO, Young Presidents Organization, which is for like, business leaders. And you meet a lot of other very high caliber success people, much more successful than I am, and you learn from them. I've been reading a lot of books from Dan Sullivan. He leads a group called Strategic Coach, so like Who Not How, 2X to 10X, self-managing company. And those books have been super influential on me, Rama, just literally in the last 3 to 4 months. Because I've been changing my whole mindset in the last 90 days. Because his whole thing is that you don't need to be first one in, last one out, because you're basically capping your growth of your company at a certain point, and you have to shift your mindset. And that's what I've been trying to do. So I've been delegating a lot of stuff that I was doing that I realized I don't need to be doing, and trying to hire new higher level people. I even got all of our managers and directors a few weeks ago, like an Audible account, and I have them all listening to Who Not How, and I want them to implement that in their own departments. I just joined Strategic Coach as well. I'm going to like my first workshop in a few weeks. And so I'm trying to join these programs because, as you start to grow, and as you start to grow, you realize, okay, how do I take it to the next level? And my time is pretty much spent. So I have to shift how I'm using my time to make higher impact, goals. And you start to realize you get humbled when you're like, hey, I can actually shift everything I'm doing. And so you start to meet other people that are in these programs that are business leaders, and they can shift your whole mindset. And so, I mean, those are some of the things I'm trying to figure out right now actively. I'm no expert on it, but offloading things that I don't need to be doing. And I think backwards that we've been doing that for the last 4 or 5 years, right? We have 250 employees. Like there was a lot of stuff that we used to do. And now I'm at the next level. It's like, okay, we've already been doing that, offloading what we were doing to other staff. I need to do it again and just keep climbing higher. Okay. And so that's kind of what we're focused on. And from a leadership perspective, I think that you have to hire really quality executive level people, empower them, compensate them well. You have to hold them accountable. But I think if you hire the right people, then I'm striving for like what's called a self-managing company right now. Okay, that's what I'm trying to do. Trying to get to a self-managing company where they don't need me to be there every day for the company to run itself. And so that's kind of what we're focused on.
Thank you. So is there any leadership principles have remained constant throughout this period?
Yeah, I mean, I think leading by example is always critical, right? You want to show people that, you're there, you're present, you're fierce, because people are looking to you ultimately. They're looking at your body language and how are you going to react to adversity. And so I think that's a big thing. And yeah, I mean, there's a bunch of leadership principles out there, like a bunch of books and stuff, but I think that you have to be yourself and you have to use your instincts, and your staff will respect that. You can't try to be someone you're not. And so I think that's been the biggest thing I've realized is just, hey, this is my company along with my two partners, obviously. We're going to run it the way that we want to run it. I am what I am. And if the people want to work with us and follow us, they will. And if they don't, then they'll leave, So I think that's a big point of it as well.
Got it. Yeah, thank you. So apart from bringing like high quality team members to perform world-class company, right? So to perform that level, what other ways you are motivating or inspiring your team to perform that level?
Yeah, I mean, really just empowering them, and letting them know that like, hey, this is your company as much as it is our company. And I think when you empower a director to take control of their department, we basically at the end of last year we changed the bonus structure. We gave bonus pools to each department leader, and they can determine how to allocate that. So if they want to give some people 0 bonus and some people 30% bonus, they can. And we said it's all based on meritocracy, the merits of your productivity. We're not going to just give you a flat, 10 to 20% bonus anymore. It's going to be based on performance, and the department leaders get to decide that. And so I think that makes them feel like they have their own little pseudo company, with their department. And then I think it's also, you have to instill, you have to make your staff believe that you trust them and that you have their back. And you have to communicate that. Like I'll tell people regularly, if they ask me my advice, I say, I mean, at the end of the day, it's your decision. I trust whatever you do. Like I trust what you want to do. I mean, I might do this, or maybe you should consider this, but I trust you either way. I have your back. As long as you get the result, I trust what you're doing. And that goes a long way, because then they don't have to look over their shoulder. They truly do feel empowered. I mean, you have to hold them accountable, right? And if people aren't performing, you got to let them know. And if people need to be terminated, you terminate them. And we do that all the time. If people don't perform, we just cut them. Obviously, we give them warnings, things like that. But I think that the culture is also something very important. It's a cliche term. Everybody throws out culture. But culture is something that you can just feel, or you can sense it, right? And you want to get the right type of people with the right type of mindset, who are more entrepreneurial minded and who want to work harder, knowing that they can make more money. So I tell people that, like I tell our staff, that our philosophy for our inner company culture is similar to capitalism. If you work harder and you get results, we will reward you. You will make more money. And we're not some big corporate bureaucracy where you have to be here like 3 years to get a promotion. We'll promote people within 3 or 4 months if they're like a star. And so we tell people that, even the all staff meetings, I got 200 people that I'm doing announcements to. I tell them, if you help the team move towards its goals and bring value and get results, you will get paid. And so what that does is that motivates and attracts entrepreneurial type of people. And the people that are just the straight 9 to 5ers that don't really care, they weed themselves out. Okay. Because sooner or later, we realize, or their manager realizes, they're not a top performer. And maybe they don't do anything wrong. Maybe they're just a plug and play kind of, average person. But we're trying to get A+ people across the board. And that's hard to do. You're never going to completely achieve that. But I'm always talking to manager directors, said, hey, if you can upgrade a position, you need to upgrade it. Like think of it like a roster, like an NFL roster. They're always trying to upgrade their positions in their roster no matter what. And we're trying to have the same mindset. So if you have a mediocre person in a certain role and you think that you can get more with some other applicant, then just cut them, move on, and let's bring in somebody else. So that's kind of the philosophy that we're trying to instill. And I think that we have a really strong core group of leaders now who have all been here at least 2 or 3 years that are managers and directors. And as we've grown, I mean, I honestly don't interact with most of the entry level or mid level staff. I just don't. I don't have time. I'm interacting with maybe the 7 to 12 directors and managers, and everything's falling underneath them. Right. And so that's how you can kind of build it out, is that you've got to have, like think of like an org chart. There's different tiers and you've got to have different levels of staff underneath one. So you have to have really strong executive and mid-manager level type of people. And that will help establish everything going forward.
Yeah, awesome. Let's shift gears towards actual deals, picking like right markets and also consistently doing acquiring high quality deals and also raising funds for these deals and also managing these properties.
Yeah.
So what factors influencing them? So how exactly you're managing, what class level?
Yeah. Like how are we picking a market? You're
Yeah,
asking?
yeah,
Yeah, good question, Rama. So yeah, so we recently expanded to Dallas and Charlotte, North Carolina, the last couple of years. And really, it's the same criteria that we used when we were, growing in Phoenix. And so we're looking for a few primary fundamentals, which are we want to be in the top markets in the country for job growth, right? So we want new companies coming there where there's a lot of jobs for, the people that live there, and we want diversified employment. So we don't want a market that's too heavily concentrated in any one industry, so that it's more insulated towards downturns or higher levels of unemployment. We want strong population growth. So we want people who are, constantly moving there. We want some of the markets that are like tops in the country for new in migration. That's really critical because you need people to live in these apartments. You need these people to have jobs so they can pay their rent. We want landlord-friendly markets, which means that if they don't pay their rent, then we can evict them in 30 to 40 days. Okay. And we don't want to be in markets like California, Oregon, Washington State, New York, New Jersey, Chicago. You hear these horror stories where they can't evict people for like 6 months or more. They're not even paying the rent. Because at the end of the day, obviously we always do right by the residents and the tenants, and we want to have a good community. And we do that, which is why, we have, good ratings, our residents like us, we've been successful. But at the end of the day, Rise 48 Equity is an investment company. Okay. So we have a fiduciary responsibility to our investors. And when a resident is not paying their rent, then they have to be evicted, because what it's doing is it's negatively impacting the investment, right? And they're violating the law and the lease that they've agreed to. So we want to be in markets that are landlord friendly, where I can evict them. And so the 3 markets that we're in, Dallas, Texas, Charlotte, North Carolina, and Phoenix, Arizona, they're landlord friendly. We can get these residents out if they're not paying their rent. And so those are some of the key factors that we're looking at when we're trying to evaluate. And we want to be in big markets too, Rama. So I know, I'm not saying there's any right or wrong philosophy here, okay? But a lot of people like to go to tertiary small markets so they can get like a lower price per door, higher cap rate, which is fine. Our philosophy has always been, I want to be in the heart of the biggest growth markets in the country. I might pay a little higher price per door, a lower cap rate, but I feel more insulated during a downturn because there's strong job growth, strong population growth. And then during the good times, I can experience that explosive growth to get, really good returns for investors. So we want to be, in the heart of these major metros. We don't want to be in small towns or small markets or tertiary markets. So that's kind of what we look at when we're looking at our markets.
Yeah, absolutely. Thank you. So there are always some kind of challenges and risks, right, associated with multifamily investing. So how exactly are mitigating those kind of risks?
Yeah, absolutely. So, yeah, I think the biggest risk the last couple of years has been interest rates, right? And so, I think one reason that we've been able to differentiate ourselves and really get through the storm, so to speak, and not do capital calls, never lose investor capital, is because we've always taken lower leverage loans. We've bought longer term interest rate caps. We've raised more cash reserves at the property level, and we've built infrastructure to truly execute these value add plans. Okay. A lot of the groups that are in trouble, not only do they take higher leverage loans, little to no reserves, short term caps, but they didn't actually have infrastructure to renovate units on schedule and on budget. Okay. If they're using, all third parties, it's really tough to control that process. And so by us having our own property management company, our own construction management company, controlling our supply chain by buying all of our materials directly wholesale from an overseas manufacturer and making all of the labor use our materials and controlling the cost, that has allowed us to renovate units on schedule, on budget, and truly force the appreciation. So as an example, in 2023 in Phoenix, there was negative 4% organic rent growth in the market. Okay. So because of all the new supply of apartments. In Dallas was like negative 1%. So if you were not renovating your units, your rents were going backwards. Okay. And that's what's happening to most people. Well, for us, we took a contrarian approach where we said, hey, now is the time we need to attack and renovate these units so that we can force appreciation, not be vulnerable and reliant on organic appreciation, so that we can increase the rents, increase the net operating income at the asset to fight back against interest rate increases. And so what we did is we renovated almost 2,000 units. I think it was like 1,923 units, something like that, that we renovated just in calendar year 2023. And our average rental increase, Rama, was $453 per unit, which was $20 above our initial pro forma rents. Okay. And we did not assume in the model initially that we were going to have negative 4% rent growth in 2023. But even with that, we overcame it and we were able to renovate these units, force the appreciation. So I think, those have been the biggest factors, is building a private equity firm that has the infrastructure to truly execute the plan, at scale. And the bigger you get, you're getting all the benefits of economies of scale, cheaper materials, cheaper labor, systems and processes that can be replicated. And so, I tell people, Rama, that we're kind of like a very vanilla, boring company where we just stick to our box of criteria and we rinse and repeat the same thing over and over. Okay. We only buy existing cash flowing, highly occupied multifamily deals and we renovate them and reposition them. We don't do development of new properties. We don't buy brand new Class A properties. We don't do self-storage or anything like that. We just kind of stick to this plan and rinse repeat. So that's kind of what's, kind of been the differentiating factor.
Yeah. Thank you. So what kind of trends do you foresee next 18 to 24 months in multifamily space?
Yeah, I mean, I think that so right now we have a little over 8,000 units. We've sold, I don't know, 1,500, 2,000 units or so. We have a little over 8,000 units. And so from our perspective, we think the bottom of the market operationally was like summer Q3 of 2023. We've been seeing things improve since then. So what I think will happen the next 18, 24 months, just from like a fundamentals perspective, is that if you're looking at a lot of these charts of new supply for multifamily, the supply really starts to decline in 2025 and it falls off a cliff in 2026. And I mean, the delivery of new apartment buildings across the country. And that's because ever since interest rates started to skyrocket in the summer of 2022, a lot of those builders stopped building because those interest rate increases kind of blew up construction loans. And so you're now going to see the residual effect of not a lot of building the last few years. And so what does that mean? That means that there will be a shortage of housing in these major markets like Phoenix, Dallas, North Carolina, these Sunbelt markets where all the people are moving to. People have not stopped going to these markets. They're still moving there, and so there's going to be a shortage of housing, which then will shift the supply and demand dynamics back in favor of investors. Okay. Where when there's not enough housing, that will cause organic rent growth to increase. And it's already started happening. Okay. So, I mean, I told you that in 2023, and let's use Phoenix as an example, because we know that market the best, you had negative organic rent growth. The main reason for that was all this new supply that was being built from like 2019 to 2021 was getting delivered across the country in 2023. Well, in Q1 of 2024, this year in Phoenix, it was the first quarter, this is according to CoStar, that you had positive organic rent growth in Phoenix since Q1 of 2022. So it was the first quarter of positive organic rent growth in 24 months. And that's because we have record levels of absorption this year in Phoenix, never been higher, meaning that people are moving into apartments, absorbing the new supply. And so people are still moving to these large Sunbelt markets like Phoenix, Dallas, North Carolina. And so, you'll start to see organic rent growth come back. Hopefully you're starting to see inflation, come down. And so if inflation starts to come down, hopefully, people's groceries, gas expenses aren't as high, and are more affordable for people. And then obviously the biggest factor here, Rama, is interest rate cuts, right? And so, I mean, right now we're recording this at the end of July 2024. These things change daily, as we know. But as of today, I was just reading an article this morning that the CME FedWatch tool is projecting a 100% chance the Fed will do an interest rate cut in September 2024. Now, we'll see if that actually happens. These things always change. It's not going to be, what people project, it's not going to be some significant cut in a short amount of time. But if we're projecting 18 to 24 months now, you would expect, you have some pretty decent interest rate cuts by then, which will, really bring back competition. A lot of the institutions will come back in, capital will flow back into the market, and you're going to start to see cap rate compression. So, we would not be surprised if a lot of deals we bought in 2023, 2024, if we're selling them near the end of 25 or in 26, because when the rates start to cut, the cap rates will compress, the values will go up very quickly. And then we feel like we can sell these deals and get, we don't project this, but we would not be surprised. So I think that you'll start to see organic rent growth improve. Absorption is going to increase, interest rates will come down, and the market should recover. And this is all from a multifamily perspective. I can't speak to the rest of the economy, but that's kind of what a lot of these big economists are projecting.
Sure, absolutely. So any impact of blockchain or AI on multifamily investing? Any thoughts?
Yeah, good question. So to be honest, I am not very savvy with AI or blockchain. Okay. So I've never, invested in any of that type of stuff like crypto or anything like that. I think that there are some different AI technologies that have helped with like multifamily operations. I think what we do is value add workforce housing. So we're buying typically 1980s to early 2000s types of deals that we can renovate. I think a lot of the Class A stuff, may have more of the AI integrations, but I can tell you that we've used different programs that are like AI, leasing assistants where, somebody calls, or it's like a chat box even, and we can schedule property tours, with AI instead of having, if they're calling at night or on the weekends or like when somebody's not at the office, then we don't want to lose that lead, right? So we've used AI to help capture those leads and set up a tour with a person during business hours. So that's been one thing that we've seen. I've talked to some different guys who have mentioned that they are trying to integrate blockchain into investing in multifamily or real estate in general, where instead of investing cash, you're investing, crypto or something. And so I honestly am not familiar with how it works. I couldn't tell you much, but I think it's an interesting concept. We'll see, what becomes of that.
Yeah, thank you. So would you share any best experience in last 4 years, multifamily investing point of view?
Yeah, I mean, honestly, I think the best experience is honestly just having like a big team. That's the coolest part. Like some people say, what's like the best achievement or whatever, blah, blah, blah. It's having over 250 employees because, you don't really feel like you're worthy of that. When you're starting this thing up, you're like hoping it works. And so once you get going with momentum and building infrastructure, it's pretty cool when you step back and realize that there's hundreds of people that trust you because they're relying on you to support their family, and you're influencing other hundreds or even over 1,000 lives if they've got kids or large families. And so that's kind of the coolest thing is that, it just gives you some sense of validation when you have a lot of people that believe in the cause, even from like your executive level staff down to your entry level staff. It's a cool feeling.
Yeah, yeah. So building solid team, right? So
Yeah.
yeah. So would you also share any challenging experience?
Yeah, I mean, the challenging experience has been the interest rates. It's just been tough because it's something that affects the entire industry. Nobody saw it coming. Even these big private equity companies, a lot of them have gotten foreclosed on. Unfortunately, we don't have any concerns of that. We've never lost investor capital, don't plan to. But the entire industry, just kind of gets blindsided. And so it's like, okay, what are you going to do to dig yourself out of this? And you can't just make excuses. Investors don't want to hear, oh, this is happening to everybody. They don't care. They want to know, how are you going to protect my money? Right. So there's a lot of pressure that comes with that. And you got to, quickly make decisions and be proactive. And so I think that we've done a good job doing that. And I think that, we're going to get through the storm here, hopefully in the next 6 to 12 months, if rates start to cut. I think we've gotten through the worst of it, is behind us. But yeah, I think the interest rates have been the biggest challenge. And then, whenever you're growing a company, there's daily challenges, right? With staffing, HR, people want to get raises, so and so is not getting along with the other person. And there's all kinds of stuff like that. And so it's just, how do you, navigate it, learn from it, and keep pushing forward.
Yeah, awesome. So any personal habits that are helping you to be successful?
Yeah, I'm super big, Rama, on habits, consistency, and discipline. And so, you know, this year especially, I've gotten back into better sleeping habits, because I was getting to the point, like in 23, I was just grinding constantly. Like I wouldn't leave the office till literally 9 or 10 every night, go to bed at like 1 or 2, just doing emails, and then wake up early. And I wasn't getting enough sleep, honestly. And so I got back to getting 8 hours of sleep. I wake up at 4:30 a.m. every morning, and I kind of, some of you have probably heard of The Miracle Morning. It's a good book. So I kind of follow that, where I'll sit down and pray and just reflect and journal, and then I'll work out, every morning. I drink 2 gallons of water every day. So like literally all I drink, Rama, is water, coffee, and protein shakes. And so I stay really disciplined. I eat the same thing for breakfast every morning. I eat the same thing for lunch and the same thing for dinner. So I just eat the same 3 meals. I don't eat anything in between, really. And I just try to stay super consistent with that, because I've just realized that it helps, obviously, your body function better. You have more energy, but also your mind, just it keeps you sharper. You have better attitude, which can help you overcome adversity and things like that. So that's super important for me. So I don't drink, I don't smoke. I'm just a boring guy, and just kind of stick to that discipline.
Sure, absolutely. So any personal learning that played major role in your life, in your career?
Yeah, you said any personal learning that played a
Yeah,
big.
yeah,
I mean, I think that, like I was just talking about the disciplines. I think having our first child, our son, I think that was a big component of it, because to me, it was kind of like a wake up call. Like, okay, you need to get back to going to bed early, waking up early, sticking to these disciplines. I mean, I was always doing the diet and the workout, that had never changed, but I was getting caught in the mindset of, okay, just grind, 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 work harder, harder. And I started to realize, okay, I need to get more rest and sleep, get 8 hours a night, so that when I am working, I'm more productive and I can have extra time to spend with my family. I think that was a big, it just shifts your mindset. Anybody who has kids knows that. I think that was a big one for me.
yeah. So any books, any recent books that impacted you personally?
Yeah, so I mentioned the Dan Sullivan books. I mean, I would recommend those to everybody if you're an entrepreneur or you're managing people. So Who Not How is a good one. The Gap and the Gain by Dan Sullivan, 2X to 10X. I mean, I'm listening to those all on Audible constantly for the last several months, just over and over. I listened to all of them at least 5 or 6 times. I just listen to over and over, because I can take different things from them, or good reminders while I'm working out. I listen to them. And then I've always liked, like, Tim Grover, Relentless and Winning. He's the former personal trainer of Michael Jordan and Kobe Bryant. So I like his philosophy, just kind of give you a cutthroat killer instinct, just mental toughness. I like David Goggins a lot. I listened to that book like over 10 times. Can't Hurt Me. And so those are some of the books I like to listen to. I listen to a lot of the books over and over, honestly.
Yeah. So you mentioned these two, Relentless and David Goggins last time also.
Yeah,
So
that's right. Yeah, yeah, yeah. Okay, there you go. I still listen to those, Rama. I stay consistent. Yeah, I'm
yeah,
just listening to Relentless yesterday. So
yeah,
yeah,
yeah. So how are you giving back to community?
yeah. So I mean, we're a big contributor to Phoenix Children's Hospital here. So we just had an event at the office here a couple weeks ago, where we had the staff make blankets, and like little coloring kits for the kids. So we're a big donor to them. So that's one of the big ones is Phoenix Children's.
Yeah, awesome. So how can listeners can connect with you, Jack?
Yeah, you can go on our website, rise48equity.com, and set up a call with us if you want about our investments. And we're happy to chat with you from there.
Awesome. And thank you very much, Jack. Thank you for sharing your journey from 48 millions to 2 billions plus, and also 250 plus employees, and also leadership side, mindset, and also, different aspects of multifamily. Thank you very much.
Yeah, thanks so much, Rama. Congrats on 400 episodes, man. Good to see you.
Yeah, thank you.